US stocks post their worst quarter since 2022 as President Trump's Liberation Day looms. Well, the S&P 500 has fallen almost 5% so far in 2025 as worries that Washington's trade policies will lead to stagflation in the world's biggest economy. Chris Rossbach is Chief Investment Officer at J. Stern. Chris, what have you made of the market reaction in the lead up to the imposition of tariffs on trillions of dollars of US imports?
Well, we invest in great quality companies, and I think what has been clear is that the outlook for this year has been very strong in terms of the investments by corporates and the consumer demand. So what's taking place is against the backdrop of what otherwise would be a very strong economy. The sign is that for President Trump, uncertainty gives him negotiation leverage, but uncertainty also takes a toll. So we've seen it in terms of the consumer sentiment. We've seen it in terms of some of the indicators for corporate spending. And so I think we will have to see what happens now and whether that sentiment change is also going to have an impact on the real economy.
So are you worried about recent surveys that are sort of pointing that towards both business and consumer sentiment faltering a little bit?
Yes, clearly. There are signs that the sentiment is going to spill over into actual behavior. And if corporates start spending less because they're not sure about whether their plans will work, about what the regulatory and legal framework for them is going to be, and if consumers stop spending and indications are that they're saving more because they're worried about the uncertainty, and we've also seen inflation expectations by consumers go up to record level, then that will have an impact on the real economy.
Now, there's some out there who might see this as a buying opportunity. Are you one of those people?
Yes, we think that for long-term investors, if they have their asset allocation right, and if they keep on being focused on the fundamentals of companies, volatility, geopolitical or macroeconomic uncertainty like we're seeing is a buying opportunity because the laws of economics have not been suspended. And I think the interest of President Trump and his administration is for a prosperous, growing U.S. economy and a successful and increasing stock market. Valuations are already low coming into this year, and they're even lower. So as we get through this and as we see what kinds of tariffs get announced on April 2 and then what kinds of tariffs get implemented, I think it is already starting to look like a very attractive opportunity to buy great companies.
Now, I mentioned the S&P 500 in the introduction, but the tech-heavy Nasdaq is down over 10%. Do you think this is all linked to the fact that investors are worried about the amount of spending that's going on with AI?
I think that's more of a headline risk. The announcement of DeepSeek for the market was a shock, but it seemed to come at a time when there were people looking at the strong performance of these large stocks, of course, Nvidia, but also the big tech platforms, the cloud computing businesses and smaller businesses, and wanting to sell them off. The valuations, again, were already attractive. And what has now come out is that DeepSeek for the industry is something they're aware of. It's a platform, an app that runs on the large language models, and we're just at the beginning of realizing the promise of computing capacity for corporates and for consumers. So we think that the spending is underpinned. There's shifts going on. Some of these announcements we've seen, for example, have to do with the changing relationship between Microsoft and OpenAI. But this is normal business, and it doesn't take away from the underlying driver of computing capacity and the use cases for AI. So we think it's time to start looking at these companies again.
Now, European equities are outperforming US stocks. Should investors look more closely at Europe now?
One of the impacts of President Trump's policies is to really put Europe in a position to pull its weight. It's the world's largest consumer economy. It has significant resources, technological know-how, and it's time for Europe to start investing. It's time for Europe to also start investing in its defense in a multipolar world. So this is one of the impacts that has been clearly received, and especially with what's been going on in Germany, it's looking quite positive because there's real change taking place. So this will benefit Europe. It will benefit European corporates and European consumers, so it's not surprising that companies that have greater exposure there are doing better.
And that was Chris Rossbach from J. Stern. And don't forget, you can watch more videos on Reuters.com.